Now, unfortunately, I had 1,400 Bitcoin stolen in 2013. Probably most of your viewers weren't around back then in the States. It was really hard. The tools were not there. There was no such thing as a ledger back then. So I was not technically background. And so I woke up one morning and 1,400 Bitcoin was gone. I believe it was $250,000 worth at the time.
Wow.
Super like, knife in the heart. I mean, current value, I don't know, probably something in the order of 10, 20, $30 million, something like that.
Today's video is a special one where I've interviewed a good friend and a very successful entrepreneur and crypto investor. His name is Max Wright, also known as the Contrarian Dude. Now, we got on the Zoom call and it ended up being over an hour long. So what we ended up doing, and this is really, really worth watching, we talk about just the big picture of crypto, not just short-term stuff, but really what are we looking at for the next few years, maybe the next decade. We take a look at macro stuff. We take a look at, how low is Bitcoin really going to go and how high is it going to end up going? Is it going to become an inflation hedge? So many different things we talk about. So this is really worth watching. We split it up into two different videos. So this is part one that you are about to watch, and part two is uploaded on Max's channel. So the link will be down below in the description. There'll be a link to part two on Max's channel. So I highly recommend after you watch this one, you click on that link, you head over to Max's channel, go and watch part two, and while you're at it, go and subscribe to his channel. So for those of you who are new, maybe if you're coming over from Max's channel to watch part one over here, welcome. Subscribe to the channel down below, click the notification bell, that way you do get alerted to future updates. If you want to know more about me and what I do with intelligent cryptocurrency, click on the link in the description down below where you can get on my email list, you get my free crypto masterclass, and you get all future updates whenever I upload a video via email. It's a very easy way to stay up to date. And you can also follow me on Instagram, Twitter, and join our free public Telegram. The links are in the description down below. With that out the way, without further ado, let's dive into today's interview with Max Wright. What's up, guys? Dirk here, and today I have a very special guest that I've been wanting to interview for a long time on the channel. His name is Max Wright. He's also known as the Contrarian Dude on YouTube and social media, and he has a very good understanding of financial markets, stock markets, real estate, but also Bitcoin and crypto. And it's really a great pleasure to have him here. So welcome, Max, to the channel and to the interview.
All right. Thanks so much for having us.
Awesome. So Max, for those of you, the viewers who are watching who don't know who you are yet, maybe could you give a quick, like, couple-minute intro who you are, your history and what you've been doing, and especially like your crypto history. How did you find Bitcoin and what is your involvement with it right now?
Sure. So, I mean, serial entrepreneur for the longest time, mostly online stuff, but we'll get to the crypto stuff quickly. So 2012, I always had a passion. I'm not formally trained in macroeconomics, but I've always had a passion for it. Just really looking at trends and cycles and the creation of money and all that kind of stuff. And so I first came across Bitcoin in 2012. So the first Bitcoin I bought was like $10. And so just been around for a very long time, seen a lot of it. Now, unfortunately, I had 1,400 Bitcoin stolen in 2013. Probably most of your viewers weren't around back then in the States. It was really hard. The tools were not there. There was no such thing as a ledger back then. So I was not technically background. And so I woke up one morning and 1,400 Bitcoin was gone. I believe it was $250,000 worth at the time.
Wow.
Super like, knife in the heart. I mean, current value, I don't know, probably something in the order of 10, 20, $30 million, something like that. I remember every now and again I want to torment myself. So I'm like, what is 1,400 times the current Bitcoin price? Like, I remember one time saying it was like $50 million or something.
Oh,
But
wow.
anyway, I took that lesson and I was like, okay, I got two things here. I believe in Bitcoin. I think it's going to change the world. I think it's an absolute imperative that it does change the world, or else we are all effed. So, okay, what are we going to do here? Are we going to go and cry in our Cheerios, or are we just going to go and grab whatever pennies and dollars we can find and reinvest, and this time take security more seriously? So I did the second option, got back into crypto as fast as I could, and with as much money as I could, and still turned out all right. Still a crypto millionaire, but would have been nice to have the 50 million too.
Yeah, of course, of course. I actually had something similar. I mean, but I didn't get hacked or anything, but I got into crypto. I bought my first Bitcoins around $200, but but I didn't know any of the stuff that we're going to talk about in today's video. I didn't know about finance and monetary system, none of that. So, I held that and I had a decent amount. It wasn't huge, but I mean, if it would have been today's value, even it would have been good. But I sold it all when it doubled. So
Oh, really?
yeah, that was my lesson. Obviously, looking back, I do the same. I calculate a little bit, like, oh shit, could have been quite a bit. But those are basically the stories that a lot of people have, and it just really shows like knowledge and education is really what you need, because you can even be in the right place in the right time. If you don't know what you're doing and you don't want to hold on, or you don't know why you're holding on, you can end up selling too early.
Exactly. So yeah, all this stuff's super important, and it's tough to have that flexibility. So if you're of the mindset of, well, I mean, I'm just going to try and make some money here, and once it's a nice amount of money, I'm going to take my profits. Well, then what you find yourself is, yeah, you sell it after it doubles, but you miss out on the 100x.
Yeah.
But if you don't have that mentality, then the other end of the spectrum is, it's like it's gone up 100x. It's like, well, did you sell? It's like, no, I wrote it all the way back down.
Sure.
And so, which mentality do you have? Do you have that one or that one? Either way, it's kind of like a little bit broken. So then the next evolution is just like, okay, let's see if I can become a little bit more strategic, whether I like it or not. Like I'm gonna have to be a little bit of a trader here and understand the market, understand the cycles and stuff like that. Then you go, okay, now I'm starting to be a little less emotional. I'm starting to have a little bit more perspective, starting to time things a little bit better. And so that's where we hope to get to, right?
Yeah, I agree. And I think most people go through that when they first get involved with crypto. In a way, it's probably one of the best education, um, you know, incentives that we have to learn about finances and market cycles and all that kind of stuff. Because you go through your first bull run and you had this potential to make all this money, and then you didn't sell and it went all the way back down, even less to that you started with. And this has happened twice now. So obviously a lot of people who only got in this last cycle, they're only learning that now. So yeah.
Yeah.
So question for you. Okay, so most people think, crypto and Bitcoin and this kind of stuff all exists as a separate asset class, but obviously it's really not. It's very much related to the larger macroeconomic picture in the global financial markets. Probably because Bitcoin is now very institutionalized, so there's big banking money, the same strategies get involved. So it tends to follow the stock markets, the US markets, even the US dollar index. So having been in this position where we're now, the Fed is raising interest rates, right? The quantitative tightening is starting. So we've been in this major bull run for the last 14 years. And at some point, that's going to come to an end. We haven't had a bear market in stock markets since 2008. And we're at this point now where people are thinking, we are going to get a sell-off, and other people are saying, hey, it's going to reverse and we're going to just continue going up forever and not get that sell-off due to, the Fed just continuing to print. So what do you think is going to happen in the next 6 to 12 months in the financial markets? Do we get a crash or do we continue going up?
Yeah, well, so in the broader financial markets, I mean, the central bankers of the world are basically telling us, it's like, no, inflation's got out of control, and we have to cause a recession or depression to fix it. So, I mean, they're not hiding it. They're telling you what they're going to do, and their goal is what they call demand destruction, and that's a kind of a speak for, well, if we make everyone poor, they can't buy stuff, which means the inflationary pressures will be relieved. So demand destruction means making everyone poor, and so that's basically their goal. That's their strategy. Thank you, central bankers. Reason number 723 about why we need a Bitcoin standard and not a central banker standard. But yeah, so I think you've heard it all before. Like they have boxed themselves into an impossible position. They have anytime there was a problem in the last, so that the way the economy should work is you should get this creative destruction of the free market. There's people are creating companies and entities and new systems, and they're just constant creation, but with that, constant failures. Things are supposed to fail and go away. And it's just like throwing stuff against the wall and see what sticks. That's the capitalist and free market method. It's the best one we've got. There's no other better system in the world, right? And there's entrepreneurs out there doing stuff, trying things. Some succeed, some fail. Well, we got into a situation where governments became too big, and governments want to put their finger on the scale and say, "Well, I want to get elected, so I don't want this year to be a year where everyone's losing their jobs and everything's bad. So we're going to start playing with it." And so central bankers step in, Congress steps in, and they're like, we're going to have a bailout package, or we're going to do, what's this last one now a few weeks ago, which is the inflation, what was the act called? Inflation Reduction Act or some nonsense. And every single thing in there is going to cause more inflation. It's just right. But what they actually should call it is help me get reelected in the election coming up, because I want to buy a few more years. And so let's just spend a whole bunch of money and see if we can keep things afloat. And then so you got there as the central bank on the sidelines that they're going to, anytime the Congress spends money, they're just going to print the money so that they can spend it. That's not going to stop anytime soon. But what they are trying to do to get that demand destruction is to go ahead and raise those interest rates. Now, they've also said they're going to sell off, reduce their balance sheet, which means sell back to the market some of the stocks and the equities and the things that they've bought along the way. And so that's also a part of what they do. But you wrap all of this stuff up. And, a great thing that was said after COVID happened, right? COVID happens, is like a 30% crash in stock market, even bigger crash in Bitcoin. And then the theme after the next couple of months was that the Fed's going to come back and rescue everything and print the money. And the theme among successful investors at the time was, don't fight the Fed, right? They're telling you what they're going to do. They're going to print a whole bunch of money. They're not going to let markets go down. Don't fight the Fed. It turned out to be a very, very good strategy. Invest in anything, and it went up. Well, here we are, and now we see the Fed's telling us we are going to cause demand destruction. Demand destruction means we are going to make people poor. We're going to raise interest rates. We're going to crash markets. We're going to do what we're going to do so that you guys stop spending money on stuff, because as you guys spend money on stuff and bid the price up, that causes inflation. So if we hold with the same thesis, don't fight the Fed, that tells us they're going to cause some a serious crash here. Now, we've had some pullback in equities and like the Dow Jones and the S&P and all that kind of good stuff and the markets around the world, but I think it is going to get a lot worse. And I think Bitcoin is a leader. I think it's leading. In fact, just had perfect the other day. It's like Bitcoin dropped down like $2,000 off its highs of like, I think it worked its way down from 25 to 23, and then went from 23 to 21 in like the blink of an eye.
Yeah.
And then the following day, the equities markets had a big sell-off too. And that's kind of what I see. I see it used to be that like the markets could lead Bitcoin. Now I kind of see that they kind of work together in tandem, and sometimes Bitcoin leads. And so I guess summing all of this up, I think we have a lot more downside to come. And I think we can learn from maybe the dot-com bubble. I made a video about this just recently. I think we can learn from Amazon and the dot-com bubble a lot. And so just a little bit of history here. Amazon hit the stock markets in 1997, right? And in 2000, the price went absolutely ballistic, and there was a dot-com bubble. It's like everything, this new internet thing is going to be the best. It's going to be amazing, and there's a whole bunch of people just like throwing money at anything with a dot-com. And it kind of reminds me of the Bitcoin world, the crypto world, right? It's like the ICO phase and DeFi and NFTs. It's like, oh, here's a picture of a retarded monkey. Let's make that worth $1 million. It's like, but it's on the blockchain, so it's going to be good, right? And so we had this absolute euphoria, very similar to the dot-com bubble, and everyone was making money and everything was good until the next recession happened. And then we realized that, look, the premise is true. Blockchain's a big deal. Blockchain's going to change the world. Yes, the number of users is going up every day, but price has very little to do with the fundamentals when a recession comes. And so, the dot-com bubble, 90% of companies just disappeared, they're gone, right? But the very, very best ones, like Amazon, a handful of others, they stayed. And Amazon went down, I think, at the time it was $100, but they've done a whole bunch of stock splits. So I'll use today's money, okay? So the price went up to $5 and then crashed down to 25 cents. And then from the next two decades, it went up like 70,000%. Amazon.com stock from 25 cents up to over 1,000. I think it's a little bit less than 1,000 now. But what we saw was the fundamentals were there. Amazon continued to grow. It was a good business with good leadership and good infrastructure and well capitalized and all the things. And so it survived. But the price got absolutely destroyed, even though the internet was the next big thing. And it was a big deal. And the number of users were constantly going up. Now, that happened all relatively quick. Amazon first listed in 1997. 2000 was the next recession, and the dot-com bubble breaks there. We have Bitcoin. It hasn't been around for 3 years, right? It's been around for 12.
Yeah.
But it was invented in 2009, just 1 year after 2008, the global financial crisis. And we have been in the longest bull run in the history of the Republic. There's been 47 booms and busts since the beginning of the United States. They average around 4 to 7 years. More recently, they've averaged a little bit longer, 8, 9 years. This one's been going for 12 years. It's the longest in the history of the Republic, right? And so I think, although the time scale is very different, for Amazon, it happened in 3 years from when it was listed to when it had the when the dot-com bubble happened. Bitcoin's been going for 12 years, but it's the first real recession it's going to see, which I think we're moving into a very heavy recession here, and it's going to be the very first one it's seen. And so I think we are going to have a repeat of the dot-com bubble. We're going to have the dot-com bubble crash. We are going to have a crypto crash. And it doesn't mean crypto is not amazing. It doesn't mean it's not the next best technology. It doesn't mean you're not going to see number of users increase week after week, month after month, year after year. I think you're going to see all those things. And still, we're going to see the crypto price probably suffer here. But then here's the good news. When it bottoms, I think we're going to see like a decade, like the first decade of Bitcoin was the best investment on the planet.
Yeah.
The second decade of Bitcoin is going to be the best investment on the planet. You just have to put up with a dot-com bubble crash in the middle, right?
Which could last a little bit longer than most people think. Do you think there's going to be like a scenario where, this bear market does continue for maybe like 2 or 3 years?
It absolutely could happen. I think what they're going to do is they're going to make it pretty deep and pretty short. So I think what they're going to do is they're raising interest rates very, very aggressively. I think they'll continue that, and they're going to cause some serious pain and misery. Things are going to get crash quickly, and then they will be forced to act, and they'll be forced to pivot. And it's like, okay, we've caused so much pain. Demand destruction has been successful. Everyone's poor, and so now we can start creating money again. And so I went back and had a look at the charts of Amazon from its peak of $5. And again, if you look at the chart from the time, it was $100, but stock split have kind of messed things up. So from its peak of $5 in early 2000, it took 7 years to get back to that $5.
Yeah.
Now I think the cycles are moving much, much faster and much, much quicker. I think Bitcoin's probably going to do it in 5 or 4 years, which is kind of convenient because it ties into the 4-year cycle of Bitcoin. But that 4 or 5 years will look like 18 months to 2 years down and 2 years to 3 years up. Right? So somewhere in this 12, 18, 24-month period, we're going to see the Bitcoin bottom. And so, all this is kind of tying into the Bitcoin 4-year cycle, which is kind of really interesting and convenient. It means you don't have to choose one or the other. You've got the cycles in perfect harmony. I think we're going to see a low here sometime in the next 12 months. And it could be much lower than people realize. Like it's not gonna, it could break all the models. Like, so you look at all the models, say, well, I mean, historically the 200-week moving average is a fantastic time to buy, and it's been perfectly true. But the macro economy has been flowing with Bitcoin. Bitcoin's been swimming with the current for the last 12 years, and so when the current switches. And now it's against Bitcoin. Now all of a sudden you're going to see all the models break. The 200-week moving average, you're going to see, the regression band, all of these models that are modeled off Bitcoin in a relatively stable, secular bull market. When that recession, depression comes, all those models are going to break. And so I think we could see Bitcoin on to the downside quite significantly.
Yeah, that's very possible, actually. Especially if you compare it to the last bear market. I mean, Bitcoin on average drops 84, 86%, which would take it down to about $10,000 or so if it were to drop 10 or 12,000. So that is definitely possible. One thing that I've noticed that's super interesting is this 4-year cycle based around the halving. And people say this 4-year cycle is dead, but so far it's still completely spot on. We've had the bull market start after every halving. We've peaked pretty much every 4 years, in November 2013, December 2017, and now again in November 2021. So does this continue? Like, why is this happening? And what do you think?
Yeah, it's a great question, right? How Bitcoin works is every 4 years, just baked into the code, every 4 years, the amount of new Bitcoins that come into existence gets chopped in half, right? So for the first 4 years, every 10 minutes, 50 Bitcoin was created. For the next 4 years, every 10 minutes, 25 Bitcoin was created. For the next 4 years, every 10 minutes, 12.5 Bitcoin was created. and it just keeps on getting chopped in half, chopped in half, chopped in half. Now, what that means is that's the rate of inflation of the currency supply gets chopped in half. So Bitcoin becomes rapidly, increasingly scarce. As time goes on, it becomes more and more scarce. So we know if you map that out, you chop it in half, chop it in half, chop it in half, chop it in half. After 100 years, it becomes tiny, trivial, insignificant. The amount of it stops to the point where it just stops, right? So, but if you think about that and you understand that geometric procession, half of all Bitcoins that were ever going to be existed after 4 years. 3/4 of all Bitcoin that were ever going to be existed after 8 years. And what's in between that? 87.5% of all Bitcoin that was ever going to existed after 12 years. A little bit less because it's not quite a 4-year cycle, it's a bit less. And so right now, I think we've over 19 million of the 21 million Bitcoin has already been created. And so now the amount of Bitcoin has become very, very scarce. So what does all this mean? Every 4 years, there's a giant shock to the supply. It would be as if, every 4 years, right on schedule, you knew that the Fed was going to come out and say, we are going to double interest rates or halve interest rates, and we're just going to do that forever. Well, that would cause a complete change in the dynamic, right? It would completely change the economy. And that's what happens with the halving. It completely changes the economy. Now, we as investors, because this is written in the hard code, we all know this. We know it's going to happen. And so we can anticipate that, start, and front run it. We can start buying Bitcoin before it happens. And so, the lows are usually in between in these things, and then you have a big run up, and then there's a big crash, and sort of the halve, like from the trough to the peak, is kind of the halving kind of happens in between there. And so this shock to the system is what drives this 4-year cycle. So now the question becomes, is the 4-year cycle still valid? Because it used to, yes, it was a drop of 50%, so that's consistent, but the amount of impact that has gets less and less every year. And so it makes sense that we would expect that to disappear over time. At some point, that becomes less reasonable. There's another reason it becomes less impactful, is the ones who get the coins are the miners. Now, mining has become a very, very industrialized game. It's a big player game, and we have companies on the stock market with crazy valuations and access to capital in different kinds of way. So it used to be the hobby miner would mine at home, and he'd have to sell the Bitcoin to pay for electricity, and he gets to keep a little bit of Bitcoin for profit, right? Yeah. But now we have these mining companies. The majority of mining is done by huge companies on the stock market, and they have access to capital markets that individuals don't. And they don't need to sell the Bitcoin to pay for the electricity to use to get the Bitcoin for next week. Right now, they just go to the money markets and they go and borrow $50 million, $100 million, $500 million, pay for all their electricity, and they can choose to speculate on the price of Bitcoin and hold Bitcoin, which would typically be a very good idea. So a couple of things are happening. The impact of the halving should be less because it's a smaller fraction of the overall Bitcoin supply. Two, the ones that affect the miners, the structure of miners are changed. It's no longer guys in their basement paying for electricity week to week. It's big companies who with access to capital. And so those two things suggest that eventually, and maybe this cycle, the next cycle, or cycle after, the 4-year cycle should really end. And all of that little bit of history, fun stuff. Now to answer your question, has it ended? How important is the 4-year cycle? I think it's a little bit important, but not that important. And I think what I kind of mentioned earlier, the much bigger, more important issue is the looming recession. And that just happens to be in a pretty similar phase to what we would have expected with the 4-year cycle. And so that it looks like the 4-year cycle is still going. And it is still going to a bit. It's affecting the price to some degree, I have no doubt, but it's a lot less than it used to be. And I think it just happens to be in phase with another cycle that's kind of taking over and is a lot more dominant.
It seems like it, because the next halving is obviously middle 2024. So that gives us enough time for, an extended crash or recession, maybe for a year. And then maybe it gets front run a bit, maybe towards somewhere in 2023, maybe we start a new bull run. And it's interesting you say it lines up with the cycles, because that's another thing that's happening perfectly with Bitcoin, is that it's perfectly inversely correlated to the US dollar index. So we've had both the 2017 and the 2021 bull runs in crypto when the US dollar index went down, and we had the bear markets when it went up. So that's another thing, like, why is that happening?
Yes, so, I mean it's a sign that the Fed has just become such a beast that it is the economy, and this is it's a great tragedy. Like people, I know people often take a look at the America and they say, oh, it's like late stage capitalism, or it's no, it's late stage central planning. It's the Fed has become everything, and
Yeah.
so there's really now just one trade. You're either long dollars or short dollars. So it's like, okay, the Fed's tightening, raising interest rates. They want markets to crash. Sell everything, be in dollars. The value of your dollar is going to go up. That's your DXY, right? Um, and then, or the Fed's loose, they're printing money, everything's going to go up. Great, buy anything, real estate, stocks, crypto, everything's going to go up. And so it's the single trade. You're either long dollars or short dollars. And so it is a great tragedy in how broken the markets are. But the Fed is everything, and everything will go up when they want them to go up, and everything will go down when they want it to go down. And
So
and eventually the whole system will break.
yeah.
But I'm not sure exactly how close we are to that. But that's the current system. It's just there's a singular trade going on right now.
So what do you think of the US dollar index? Is it going to continue higher? It's currently like just over 108. Do we get some sort of crazy squeeze where the US dollar index goes back to 120 and stock markets crash, crypto crashes, and then it reverses? Do you think that's a possibility?
I think the DXY is going higher, and the reason is I think that recession is going to get bigger and deeper, and they call it the US dollar wrecking ball because it's the global reserve currency, and when the US dollar gets stronger, what it means is for something that most people don't realize is two-thirds of all of US dollars are outside of America, not in America. For other countries, that is not even close to true. Like 95+% of their currency is inside their country because it's the only place it's used. But the US dollar is used all over the world for all kinds of things. Pretty much all debt. If a bank in Thailand wants to lend to an entrepreneur in Indonesia to start a company, that debt is denominated in US dollars. The Thai bank lends dollars. The Indonesian customer will borrow it in dollars, and so all of this debt is floating around. All of these things are floating around the world in US dollars, right? And this changes the dynamics very, very significantly. So now you have this system of when the dollar gets stronger, that entrepreneur that borrowed the money in dollars, his repayments have to be so much more. He has to earn more Indonesian, whatever the currency is in Indonesia. Should have chosen a currency where I know the currency, so I could have
I think
sounded
it's
smarter, but I did it.
rupee or
It's,
rupiah.
it's, it's the Indonesian rupiah, is it? Of course, I've been to Bali so many times. I should know better than that. Um, and so all of a sudden, they've got to make these huge repayments on their loans, and it really stifles their business, right? And so what you have is it causes a recession all over the world. But then with that recession all over the world, we have contagion. We live in a globalized economy. That causes a recession here in America too, right? And so all of these people are, oh, it's a recession. Sell everything and buy US bonds or just stick it in dollars and be super safe, which again strengthens the dollar. And you get this very, very tragic circle. The dollar gets stronger, causes a recession. People are like, oh God, I need to sell everything and be in dollars for safety. Buy dollars, strengthens the dollar, get this vicious circle. They call it the dollar wrecking ball, right? This is kind of down the same path as the dollar milkshake theory from Brent Johnson. It's like when the recession comes, the DXY gets extremely strong compared to all other currencies, which is a disaster because it causes more worldwide recession, and so the cycle goes. In short, I believe the DXY is going to get a lot higher because I believe we're going into recession. It's going to cause all that problems, and that cycle is going to continue. And then the way out of that cycle is the US comes along and just prints a whole bunch of money, and then everything goes back up again. And
Yeah,
so
until eventually that's unsustainable because at some point, that's just not going to work.
well, two things are going to happen. The rest of the world says we can't use dollars anymore. And what that means is basically the US dollar collapses because when all that money overseas comes back, it causes massive inflation here. It's like, well, no one wants my dollars overseas. The rest of the world stopped using it, and it's too dangerous and too terrible to take out loans in dollars. So what are we going to do with our dollars? Well, go and buy some assets in America. Go and buy houses. Go and buy companies. Go and buy Twitter. Go and buy Facebook. And then you get this again massive real estate inflation, equities inflation, and all that kind of stuff here. And so that's kind of how that cycle works. But the Fed doesn't really want that to happen. Like we don't want a permanent break where no one wants to use the dollars anymore and all those dollars come back home because that would cause massive inflation here. Yeah. So they go, okay. Doesn't matter what's happening domestically. we will be good citizens of the globe and we will devalue our currency by printing a whole bunch of dollars. And then the rest of the world goes, oh, okay, cool. Then we'll continue to use you, and the cycle continues. Now, it's something that is a completely unsustainable, ridiculous, broken, and immoral system. Again, it's why Bitcoin is an absolute imperative for society. But that is the system that we live in, and as investors, we got to understand the rules of the game and know what's going to happen. So that's kind of what I think is going to happen.
Yeah, but so far, what's interesting is that, we've had this whole theory of like Bitcoin is a hedge against inflation, which so far hasn't worked out to this point. Do you think that's going to change at some point? Because inflation's at 40-year highs and Bitcoin is going the other direction. It's supposed to go up. It's just been going down. So obviously, as inflation gets higher, people have less and less money available. So the average person is not going to be able to buy Bitcoin. So does at some point it become an inflation hedge, or is it purely something for speculation for rich people?
Yeah, so it's a perfect question, because that is the question, right? Bitcoin's promise is that it's a limited supply. US dollars is an unlimited supply. They keep printing. It should stand that it's, as they inflate, Bitcoin gets stronger, and we did see that earlier, right? Like, after COVID, Bitcoin went up from like 3,000 to 70,000 because the government was printing all the stimmy checks and all the stimulus and everything they were doing to bail out. So it happened, but now we see that printing caused inflation. That inflation is making people poor. All of a sudden, retail can't afford to invest in Bitcoin, and we see it's caused a recession. Now we see it come back. So right now we are like in a phase where it's not living up to its promise of being an inflation hedge at all. Not at all. And so that's so that's the thing. But in answer to the question, long term, I believe it does hold that principle. But right now we're in a phase where that's definitely not the case at all.
Which is a good opportunity, which is coming if it goes even lower, in my opinion, anyway. I'm sure
I agree. So I mean, something really clear to think about in your head is, at some point they've caused so much damage. Stock market's gone down, real estate's gone down, crypto's gone down, everything sucks, everything's cheap. And then they're gonna do what we're all waiting for, the Fed pivot. And they're gonna come out and say, okay, now we're gonna lower interest rates and we're gonna print more money. And then they're gonna inflate their money supply. And that's gonna be the perfect time. And notice these things get bigger and bigger. So in 2008, the response to bailing out everyone and not letting companies fail like they should have was to print a whole bunch of money. And at the time, it was mind-blowing. They printed more money in like 2 years than it had in like the previous 250 years of the Republic. This doubled the money supply. It's crazy. And then this time around, for the next disaster, COVID, then it made that look like child's play. That was nothing. That was irrelevant amounts of money printing compared to the money printing this time. And so it's geometric, it's exponential. And so after this next one, the amount of money they are going to print is just going to be mind-boggling. And you're going to see the price of everything go skyrocket, and we're back in the same shitty system again. So yeah, it's really, really silly what they do, but they've been doing it for years. They've been profiting from it, and we've been suffering from it. But they're the ones with their hands on the levers, so they're going to keep doing what they're going to do until it just completely breaks. And I don't know if it completely breaks this time or a future time, but it will completely break. And then, thank goodness, those times are so miserable and so horrible. Like, you're talking Weimar Republic stuff, you're talking Zimbabwe dollar stuff, you're talking 50%, 100%, 200% inflation. It is as devastating as it can possibly be. And it happens all the time. It's a really regular occurrence throughout all of history. When it happens, there's nothing around to replace it. And some other country just comes in and starts doing the same stupid thing and maybe lasts 40 years, 50 years, 100 years to it, right? This time we have a brand new invention called Bitcoin. And so my hope is that when this crash happens, then people are like, and then some of the country steps forward, the central bank steps up, the IMF, International Monetary Fund, says, don't worry, we know we screwed up, but we've got a new idea. Let's go over here. And I really, really hope people are smart enough to just walk away and go and buy Bitcoin, and we get on the Bitcoin standard, and all these problems will be behind us.
Hopefully. I mean, that's why the education is so key. And the more people who talk about this and make these videos and share it, the more people that listen, obviously that gives it a better chance of actually playing out. So we know this is unsustainable, what they're doing. But we also know we might have, a few years left or maybe one cycle left. And another thing that's kind of coming into play here is the regulation, which we've been seeing over the last year or two, which is probably going to change the landscape quite a bit because, in the US, they're very strict about like futures and leverage trading, that kind of stuff. Most platforms are banned. They've banned the Ethereum tornado mixer, right? Where you can anonymize your Ethereum and stuff. And they actually made it illegal with like threats of prison and stuff. So now we got this whole different situation where people can send you like tornado cash Ethereum to your address, even if you've never used it. And then you could end up being blacklisted as a US person or entity or everything. So this is starting to become very difficult, and that regulation is probably only going to increase. So what do you think is going to happen over the next couple of years in terms of regulation? I mean, we have 14, 15,000 altcoins. They're not all going to survive. Most of them are going to die, right? What is going to happen?
All right, fantastic question. So actually, you know what? Let's do this. We talked about it earlier. We'll end the video here, and we'll go and continue this conversation over on my channel. So we'll answer this question. We've got a whole bunch of things coming up. We're going to talk about the prediction for Ethereum, Bitcoin flipping. I got to looking at my notes here. We're going to talk about when Bitcoin's going to hit the all-time high. We've got lots more to discuss. Let's go and do that over on my channel. I'm sure you'll put a link in the description of this video so people can follow that and go there. And we'll go ahead and answer that question there. Does that sound good?
Yeah, perfect. So guys, the link will be in the description down below in the video, and then we'll continue this on Max's channel.
So if you like this video so far, make sure you guys hit the like button, hit that subscribe button, okay?